we've got Prashant Bindal, who is the Chief Sales Officer at Lodha, here to talk a little bit about what's driving growth in the real estate space as well as the project pipeline and more. Thanks so much for taking time out, Mr. Bindal. To begin with, despite the fact that Q1 has been seasonally a weak quarter, a lot of developers have recorded their best ever performance. What exactly is this a sign of, and do you think that this momentum is likely to continue?
Now, if you see, this momentum has been there for almost now 10 quarters. And in every quarter, I think this is the same question asked, that will this momentum continue? But I think whatever has been going on for the last 10 quarters, we believe that this is a large bull run in the real estate sector that we are seeing. And we hope to continue to see the momentum. And Q1 numbers almost equal to Q4 of the previous year was unheard of, but we pulled it off, and it's very satisfactory.
Prashant, what about growth led by price realizations? Would that be the case, or do you think prices have peaked out because interest rates are no more at that all-time COVID low that they used to be? Do you think that prices would be on the uptick or not?
You see, if you see our 17% growth, we generally, as we have always said, that we follow a price increase in a very mature manner. We take one price increase in April and one post-Diwali. So we took one price increase immediately after the year end. And so if you see our 17% growth, roughly about 4% has been led by price increase, about 7% increase in conversion. Now that is very significant, that 7% increase in conversion and about 5% increase in the walk-ins coming to the site. So combined, together, they gave us almost 17% growth over last year, Q1.
That's a take coming in. Just wanted to understand that recently you have managed to be a successful bidder for We Hotels as well in Mumbai, right? What's the strategy there? What kind of potential do you envisage? What's the rationale behind getting into this?
See, the whole idea is, if you see that we are, last year we did about 10,000 crore business in Mumbai. But we are still available only in only 50% of the market. And so the whole idea is that to get into of the 1 lakh crore market, we are available only in 50,000 crore market. And I think luxury, and so we want to get into those segments. Western segment is one area where we are relatively lower. We do not have much projects there. So idea is to get into geography. And secondly, luxury is our forte. We get, because of our equity and because of the success that we get in luxury and premium segment, the idea is to get into as many luxury and premium segments, because that is we draw our maximum equity strength there. So basically it is getting that space in that geography in Western suburb in Juhu, and to create a luxury segment there. That's the whole purpose.
Just a follow-up, you're just looking at grabbing that land at this point of time and maybe constructing a luxury residential project at that, right?
Absolutely.
Okay, and what kind of potential do you see? Because the lands that you've managed to bag through this are very marquee, very important locations. So I'm guessing the value of these also would be quite high in terms of revenue potential.
Agreed. Absolutely. We are still, we've just acquired it. So I'm sure the whole purpose is that it will give us that, the kind of, ultimately it has to make a business sense. So since we have acquired the land, the size is quite large. And we hope that in coming time, we will be able to launch the product here.
Okay, fair enough. What's the outlook when it comes to your warehousing and industrial platforms? How are they performing, and what kind of opportunity are you seeing? What kind of additional top line growth can these two areas generate?
See, we are very bullish on the infrastructure space, because I think that is where the huge potential lies, considering the kind of economic growth that India is having, and in this space. So we believe that it will eventually reach at least 10% of our business potential in the coming years. And considering that we look forward to something like 14,500 crore business, a 10% contribution from that segment will be a very healthy segment, very healthy contribution.
The other thing I wanted to talk about is the recent development. I mean, the Karnataka government announcing that upward revision in the property guidance value. How does this announcement impact you guys? Because from what I understand, you were also expecting to launch 2 projects in Bangalore, right, in this fiscal itself?
Fair enough, ma'am. Whatever the government guidelines are, we'll follow them. It will impact everybody, positive or negative, but it's good as you see more and more control systems when they come into real estate, they're always welcome. And we'll go as whatever the government guidelines are.
So you'll follow the government, guidelines. But one of the factors in the Q1 update that had come was that on a sequential basis, the debt had gone up a bit, which was a bit of a worrying factor. We do understand with the slew of launches that you had lined up that it's understandable. But what's the overall absolute level that you have in mind with respect to where debt should be?
No, that is absolutely fine because we have given a guidance of 20-20-20. That means to grow 20% year after year. And for that, we need supply. And for that, we need new land parcels. So lot of, and we acquired 12,000 crore GDP worth of products of land in quarter 1, which is we have done it upfront. And in any launch, in any acquisition, you take about 9 to 15 months to clear the back end to ensure that the product is launched. So from that perspective, it was a very positive sign that we got it. We got it in quarter 1. So in quarter 2 also, the momentum would be same. You will see the debt coming down from H2 onwards. And as our guidelines is like 20-20-20, is that our debt will not be more than 1x of our net cash flow. And we will ensure that we will maintain that. In terms of last year, we ended up with a debt of about 7,000 crores. This year, hopefully definitely less than 6,000 crores.
Less than 6,000 crore in absolute term, and you're saying you're on track to get to that number of 0.5 debt to equity by the end of the year, and second half will see a lot of debt
Absolutely,
reduction.
because debt basically depends on how much acquisition you do. And since we have done the acquisitions upfront and we have paid the money for it, so that is why a slight increase in debt, very slight, but you will see the final number coming down in H2.
Prashant, the real estate market is getting very, very broad. It used to be, the premium cities like, let's say, Mumbai as well as Bangalore that used to get the bulk of the high-end properties, but it's getting expanded. What's your view as to other geographies that you're looking at expanding in? Is Delhi NCR one of the focus areas? Chennai is seeing a lot of property development recently. Are you looking at getting into that as well?
Well, our belief is Bombay is Bombay. It means, Bombay is, if you look at the top 7 cities, Bombay is almost 40% of that business. And Pune is the fastest growing market. So we are well entrenched in these 2 markets. And we believe that, and we are entering into Bangalore. We believe that in our short-term goal of 20,000 crore in coming 3 years, these 3 markets can take us there. And it's better to leverage your strength in where you are than to expand all over the place. And we believe that Bombay itself offers huge opportunities. As I said earlier, it's about 1 lakh crore market and we are available only in 50,000 crore. Yes, we may seem ubiquitous in Bombay, but we are only in 50,000 crore worth of market and we have 20% share there. Whereas rest of the 50,000 crore market, we are hardly there. And so our endeavor would be to enter into this 50,000 crore segment in coming 3 years and get about 10% share of that. And if that happens, then Bombay itself is a 15,000 crore business for us. So the endeavor first would be to reach 15,000 crore in Bombay and 5,000 crore in Pune in coming 3 years. And that is from there, then let us take it from there.
Right. Okay, Prashant, good to have you on the show. Thanks as always for taking the time out and joining in with all the perspective coming in from your Q1 updates.
Thank you. Thank you.